I've always felt that the most important thing is to have a plan for exit. Just that when you start, you should know
Yeah.
how you're getting out. Even if your decision is that I'm going to let that go until my kids have to deal with it. I'm never going to
Hmm.
deal with it. As long as you've thought about it, I think that's the
Right.
right thing.
Sure. Oh, that's an interesting
Right.
concept.
Yeah.
There's a thread on this site about exit strategies, but tax planning and exit strategies. And the key word there is planning, right? Figuring out
Right.
how you're going to get out. And I think it never, that's a good tip,
Right.
to
So,
remind people.
so one thing I do for people, I often that I do for people when they're looking to exit is I have a conversation with those people before I've taken their money to give them an idea of where the value is. It's not a valuation. It's sort of a if I'm going to value this, the
Right.
value is going to be somewhere between these couple numbers. But I
Yeah.
have I haven't finished what I'm going to do, and I've only just briefly looked, and I haven't really thought it through. But it's going to be somewhere in here, so that
Hmm.
someone can make an informed decision so the client can make an informed decision about moving forward. If it's a $10 million business, getting a valuation once a year so that you know where your thing is maybe not a big thing. But for most of my clients whose revenues are under $1 million, it's a large
Yeah.
expense. So I'd
Yeah.
rather I'd rather people make an informed decision to be able to move forward uh, at the right time and to be able to plan than than
Oh,
uh,
good.
than otherwise.
That's
And
great. So just to
yeah,
interject a little plug for your
yeah,
business here, Phil
yeah.
Greenberg at Siegel Business Valuations. You're saying that you could be engaged to give this kind of guesstimate?
Well, what I do is I engage the client. I quote them a fee for the appraisal, and then
Yeah.
we sit down and I review the documents and say, well, you know, at first blush, this is where I see things,
Ah,
and then
so this is part of that process.
right,
Okay.
it's a part of that process, and then often people will say, yes, let's move forward, and other times
Ah,
people will say, I think we want to clean something up and we'll get back to you or
oh,
something like that so that they're in a that
okay.
you know there's a limit of for some of the TPAs it's a 90-day limit
Right,
where if my appraisal is on September 30, the transaction has to happen December 31.
right,
And if someone looks at what I've said and says, "Oh, well, I want to do that, but I have to get financing and it's
right,
going to take me 90 days to get financing." I mean, it just
right.
makes sense to
Yeah,
help them because otherwise they're constantly chasing the date, and I'd
yeah.
rather people not have to chase the date.
Oh, I see. Yeah,
You know,
that's smart. Okay.
they might have to chase the value of the plan, but you know, but at least though they're going to get the use of my appraisal for some piece of this. I unfortunately hear this a lot because it tells me that people don't understand what their duties are, but I will hear people say, well, I'm looking to repurchase the shares, and I would really hope that the shares have a low value.
Oh,
Um,
yeah.
and and that unfortunately is tells me that the person doesn't really understand what they're doing in terms of what their duties are to the shareholder.
I get it, what you're saying, but it's the redemption dilemma, right? For the
Right.
plan owned company has to, in the absence of some other form of de-ROBSifying, to redeem stock, the company has to pay cash for that stock,
Exactly.
and it's awkward to know number one that you would have to liquidate all of the company almost, and replace all of that equity with some cash to fund the
Hmm.
redemption. And
Yes.
also that how expensive it is. But what you're really getting at is that people don't often understand that this is their retirement plan investment that they should hope is worth a lot.
I think most people are attempting. I don't know if they mean to do this going in, but most people are trying to arbitrage their
Yeah.
retirement plans.
Yeah.
That's what's essential. I think that happens a lot, and then
Yeah.
sometimes it doesn't. I mean, I've had people who are doing things completely differently, and that's fine. But
Yeah.
in most instances, people, well, they're looking to um, create the best thing for them right now.
Yeah.
And
Right.
yes,
Right.
yeah,
It's understandable that they
right.
see the very short term of some of these answers.
So there's an additional step when you sell your assets. You're triggering a tax event, one final tax event. And then there's also a lot of timing. You can't file a C Corp return anytime you want. You got to wait till the tax season. The IRS doesn't let you e-file prematurely. If you sell your business in January, you might have to wait until next January to get out of your ROBS arrangement.
Really?
Yeah, it's a pain in the butt.
Because of all of the delays of paying off your expenses.
If your business sells January 2024, the soonest you'll e-file is January 25.
Oh, my goodness.
And that filing is going to trigger that final tax liability.
I see, because you have some days in 2024 that cannot be pre-filed, like you have to wait until 2025
Yeah, if
to
it's,
even.
you have to
submit
close
a
your
form.
year. Mhm.
No,
So-
and so having a CPA advise you of these things in advance. is
Yeah.
helpful.
So
There's
there's
your
a
compliance
there's a
calendar.
whole timeline for selling your business in a ROBS
Okay.
to avoid, because every month you keep it open, you got to pay that TPA for the plan.
Yes, that's right. Once, if the plan can't terminate until its assets are distributed, it can't finally terminate until its assets are distributed. And those can't be distributed until the C corporation's final tax return has been filed. So there is a lag in filing a plan termination.
Mhm.
Like the plan's final tax return, an informational return, Form 5500, has to lag behind the final 1120
Mhm.
tax. Okay, golly.
So sell your C Corp if it's an asset sale. If it's a stock sale, who cares? You're all set.
Yeah, that's the best.
Click your heels up in the air.
Okay, okay,
You,
okay,
you won.
right, okay.
If you sell your business as a stock, as an asset sale, excuse me. If you're selling your assets, do it at the end of Q3, early Q4. Close all your liabilities out Q4.
Right.
The only liability you should have left on your balance sheet going into Q1 of the following year is whatever that tax return says is your final debt.
Okay.
So that's important. You want
And
to.
you don't have to keep lagging behind. I mean, you can pay tax for 2023 in 2024 and not have to file for 2024.
You need very precise tax planning to get it extremely correct. You sell your business in Q4. At the day you sell your business, we compute an estimated tax. You pay some tax, but you still have a final tax return that's got to go out in the next year.
Okay.
So what you can do to prepare is you prepay for your final tax return out of corporate funds. Okay, we have a flat fixed fee for that.
Right.
And then, so you're set on our end. The tax has been paid in as an estimate.
Yep.
So all you got to do is get a hold of the TPA and the lawyer and
Right.
say, okay, let's terminate the plan.
Right.
And what we do is basically ensure that all the final liabilities are cleared out.
Yeah.
So if our clients were selling their businesses, we sell them, close out in Q3, Q4, and then we want to file tax season right away. In January, I'm primarily filing 1120s that are people who sold their business.
Oh, okay.
Everyone else, we tell, please wait patiently because we got to get these people done. Their TPAs are waiting.
Their tax returns are due April 15th.
April 15th for calendar year taxpayers.
For tax, yeah.
So you have 3 months and 15 days for a calendar year taxpayer. So January to April 15.
Okay.
But if you're a fiscal year taxpayer, which does happen, I think Guidance Financial probably has the highest per capita of fiscal year ends. They get 2 months and 15 days from their fiscal year ends. So that's important. If your fiscal year end is June 30, that puts you at September 15, not October 15. So if you're a fiscal year taxpayer, you lose a month compared to your calendar year brethren.
Oh, that's very interesting.
The IRS is probably trying to deter people from doing fiscal year ends. I've also had a lot of business coaches tell people to be a fiscal year end. The fiscal year end has some merit as terms of C Corp planning. but it's going to throw everybody else off. We can use tax or salary shifting to move wages into one year or the other.
Okay.
And that's been defended in tax courts. You know, the entrepreneur has the right to decide when they pay themselves.
Right.
Okay. So it's fine to structure things that way. So there is a benefit if you're going to make a ton of money and you have a lot of personal income too.
Right.
You may want to be a fiscal year end C Corp and lose that month. Okay. But if you're a calendar year taxpayer, you have no other sources of income, this is your only gig.
Right.
It puts you solidly in the middle class, maybe. Then a calendar year is going to be fine. Okay. You get 3 months, 15 days, 6 additional months for extension. So that means C Corps on extension filed by October 15.
Okay.
At our firm, we put accuracy over expedience.
Right.
If you're in a hurry to file a C Corp return, that is a bad philosophy.
Okay.
The people who file January 1st, there's problems in their books, their payroll. They'll find those problems later and have to amend tax returns.
Oh, yeah.
The C Corps don't have any perks or tax credits. There's no big refund waiting for you.
Yeah, oh, right.
There's not.
Badly. It's
There's-
better to file well.
Right. So accuracy over expedience. They're big tax returns, and I can only personally make a couple a day.
Oh, right.
You know?
Yeah, they're large, yeah.
And so at our firm, we focus on prioritizing people who need to file in urgency, like our business sellers,
The people have sold.
people who
Right.
sold their business. These folks need to shut down and go enjoy their retirement. So those are the folks we're handling in January.
Right.
And on the opposite end, in October, these are the new entrepreneurs. We don't need that first year taxpayer to get done by April. They want to get good bookkeeping and good payroll solutions in place.
Set up. Yeah.
They want to get the foundation of the house built.
Right.
So we file those in October because we're spending those 9 months building books, making, payroll accounts, setting them up.
Right. Right.
And then as soon as they're profitable, that's when we reverse gears. We get them to the front of the year.
Ah, okay.
Okay.
Right.
As soon as your C Corp's profitable, you need to make quarterly payments. But your salary allows you to adjust that profit.
Mhm.
So you might be profitable the first 4 or 5 months of the year, but you didn't pay yourself yet.
Yeah.
So we bonus you out and we have no quarterly problems. Okay. But at some point, your business is going to be very mature. You're going to have a good salary and profit.
Right.
And we do have a quarterly obligation.
Okay.
Those are the people we're filing in the middle of the year. You can think of them as like the business as usual folks.
Yes.
Because they've already been told what their quarterlies are, how to pay them.
It's like the steady Eddie
Mhm.
phase when you become profitable, you're more than a couple years old and you know what your numbers are gonna be.
Right, exactly.
Okay.
So it's kind of, for us, we have these 9.5 months to get all these C Corps done accurately. And so we plan accordingly to try to get them done in a methodical fashion.
Yeah.